Hello students and welcome to today's lesson. So in this lesson guys, we'll be completing the income statement. So please pause the video and check the comment section below where I've attached the question paper link for this lesson. Please again carefully read the question and also the additional information and the adjustments given as well. Okay, so let's get started. So guys, mainly we are required to complete the statement of comprehensive income for the year ended 29 Feb 2024. So if the year end is 29 Feb 2024, it means now our accounting period started from when? The 1st of March 2023. Okay, so we're given the information that relates to Ivory Park Limited for the year ended 29 Feb 2024, right? So as you can see, we'll also have additional information A and also information B, where we have our adjustments and also the additional information. Okay, so the first question, we need to calculate the depreciation on equipment on 28 Feb 2024. So as you can see, we're also told to refer to information 1, the additional information 1. As you can see, under equipment, we're told that no equipment was bought or sold during the year. So it means now we need to go and check on our balances. So on our balances, with the accumulated depreciation of equipment at the beginning and also at the end of the year. So since there was no movement, guys, to calculate the depreciation now, we just need to minus the difference between the accumulated depreciation at the end of the year, which is 472,500 minus the accumulated depreciation at the beginning of the year of 344,700. Okay, so should get a figure of 127,800. Okay, so what else are we required? We are required to calculate the cost price of vehicles on 29 Feb 2024. Okay, so there is actually movement of vehicles, right? But however, we need to take this figure of 1,250,000 at the beginning of the year, right? So if you can go and check on information number 1. So an old vehicle was traded in on 1st September 2023 for a new one. So the new one cost how much? 320,000. So it means now we need to add the cost of the new vehicle with 320,000. And then as you can check the asset register there, the cost price of the traded in vehicle is 240,000. Then we go and minus that 240,000. Okay, and then the figure that we're getting there, we're getting 1,330,000, the cost of our vehicles. Okay, so the next question, guys, we need to calculate the depreciation on vehicles on 29 Feb 2024. So we firstly start with the depreciation on new vehicles. So the new vehicle cost how much? 320,000. Okay, so we need to check which method are we applying. So vehicles are depreciated at 20% per annum on the diminishing balance method. Okay, so it means we need to say the cost price minus the accumulated depreciation. But however, for the new vehicle, we do not have accumulated depreciation. So it means now we are going to multiply by 20%. Okay, and then as well we need to check the months, right? So we only sorry, this new vehicle only depreciated from when? The 1st of September, October, November, December, Jan, Feb. For 6 months, that we multiply by 6 over 12. Okay, so I'm getting 32,000, the depreciation on new vehicle. What about the depreciation on the traded in vehicle? Okay, so the traded in vehicle, the cost price is 240,000, and then we also need to minus the accumulated depreciation at the beginning of the year, which is 73,600 from the asset register. Guys, if you can check the asset register there. Okay, so what else do we need to do? We need to multiply by 20% and then multiply by how many months? So we only had our traded in vehicle from the 1st of March, April, May, June, July. So it's March, April, May, June, July, August, right? August for only 6 months. So multiply by 6 over 12, and then on my side I'm getting 16,640. Okay, so as you can see, we're already given the depreciation on remaining vehicles there, which is 132,720. We do not need to calculate that figure. Okay, so please add all those values, and then the total there will be 181,360. And then what about now the other question there, where we are required to calculate the profit or loss on the vehicle that was traded in. So the cost price, guys, we need to calculate the carrying value first. So carrying value is the cost price, which is 240,000. We minus the accumulated depreciation at the beginning of the year, 73,600, and then we minus the depreciation as well during the year of the traded in vehicle, which is 16,640, and then I'm getting a carrying value on my side of 149,760. Okay, so we're told that this sold vehicle, this traded in vehicle, we received an amount of 153,660. As you can see, we received more money, which is how much? 153,660. So our vehicle which is traded in is worth how much? 149,760, but we sold this vehicle at 153,660. So it means now we received more money, which means now we have profit on sale of a fixed asset, right? So on my side I have 3,900. Okay, so let us proceed to the main question now. So the main question, guys, we need to calculate where to prepare the statement of comprehensive income for the year ended 29 Feb 2024. Okay, so as you can see, we're already given certain figures there. The cost of sales given, service fee given, and then we also have other operating expenses that are given from the answer booklet. The interest expense as well is given. The net profit after tax is also given. Okay, so it means now we need to calculate what? Our sales, right? Since we are not given from those balances, right? We don't have the value of sales, but what we have here is the cost of sales of 4,780,900. Okay, so an additional information number 2, we are told that the company maintains a markup of 60% on cost. Note that goods costing 115,000 were sold at a markup of 40% on cost to internal employees. So it means now to the general public, guys, we are maintaining a markup of 60%. But however, when we are selling to our internal employees, we're maintaining a markup of 40%. So it means now from this cost of sales, we need to minus the cost of sales of the goods that we sold to our internal employees, so that we can have the cost of sales for the goods that we're selling to the general public, right? So I'm getting a figure of 4,665,900. And then we need to multiply now. We need to calculate sales for these goods that we're selling to the general public by multiplying by 160 divided by 100, right? So remember, we're maintaining 60% to the general public. But however, to our internal employees, we are maintaining 40%. So it means now that 115,000 we need to multiply by 140 divided by 100. Okay, so please press your calculator there. So on my side, I'm getting a figure of 161,000 and also a figure of 7,465,440. Okay, so please press your calculator and add those two figures. So after adding those two figures on my side, I'm getting a figure of 7,600 and 7,626,440. Okay, so let's calculate gross profit now. So gross profit is sales minus cost of sales. Okay, on my side I have a figure of 2,845,540. Okay, so let's proceed. We need to take into account now other income. So on other income, guys, as you can see already, given a figure of service fee of 1,757,700, and then we need to check if we have any other income. Yes, we have. So if you can remember, we did calculate profit on sale of asset on think it was the last one question there on 1.1.4. We calculated a figure of how much? 3,900. Okay, so we need to check if we have any other income. Yes, we have the rent income. Okay, so speaking of rent income, guys, we need to go to additional information number 6. So in additional information number 6, we have that transaction there that affects our rent. But however, we need to go to our balances first and take that figure of 158,100, right? So now, guys, on transaction number 6, we are told that a tenant is renting an office from Ivory Park Limited, right? So rent for this office has been received up until 30 April 2024. So the rent decreased by 8% when on 1st December 2023 on the office rented. Okay, so it means now we need to determine the rent before the decrease, right? So before the decrease, we're paying how much? We don't have that value, but what we know from the 1st of March, April, May, June, July, August, September, October, November. For 9 months, we're paying rent without a decrease, but we don't know that rent, so it is going to be 9x plus again. So the rent increased from when? The 1st of December. 1st of December, which is December, Jan, Feb, March, April, right? For 5 months, the rent increase, but we don't know again the rent before the increase. Sorry, the rent before the decrease. So we're going to have 5x. Okay, so we're told that rent has decreased by 8%, which means x, this x minus x times the 8%. Okay, which is equals to the rent of 158,100. Okay, so we'll have 9x plus 5x, right? 5x inside the brackets there, sorry, minus, right? 8% is actually 0.08x, which is equals to 158,100. Okay, so we have 9x plus, we're going to multiply by this 5 inside the bracket. 5 times x, and also the 5 will multiply the 0.08. So 5 times x will have 5x, and then again 5 times x will get 0.4x, which is equals to 158,100. Okay, so 9x plus 5x minus 0.4. So on my side, I'm getting 13.6x, 13.6x, 13.6x is equals to 158,100. Then we divide by 13,6, both sides. Divide by 13,6. So 13 we cancel 13. X is equals to, I'm getting a figure of 11,625. So this is the rent, guys, before the decrease of 8%. The rent before the decrease of 8%. So we need to calculate the 8%. Here we're going to multiply by 8. So it means now the rent decreased by how much? 930. So we need to go now to our rent, right? The rent before the decrease of 11,625 minus the decrease of 930. Okay, so after minusing the decrease of 930, I'm getting a figure of 10,695. So this is the monthly rent now after the decrease. So we're told there that we received rent up until when? Until 30 April 2024. So 30 April is actually outside our accounting period. So which means we received rent in advance for how many months? For March and April. So we received rent in advance for 2 months. So it means now we need to go and minus there. Minus 10,695. But for how many months? For 2. Then we multiply by 2 here, and then please press your calculator on your side. So on my side I'm getting a figure of 136,710. Okay, so we need to go and check if we have any other income. So we'll firstly check what, guys? The trading inventory. So with the trading inventory in our books, as you can see from our balances, we have a figure of 654,500. And then we compare that figure with the physical stock take on information number 3. So the physical stock take reveals that we have 647,100. Okay, so as you can see now, the actual value of our inventory is less. It means now we have trading stock deficit, not surplus. Okay, so let us move to provision for bad debts. Okay, so provision for bad debts, guys, information number 4. So provision for bad debts must be adjusted to 5% of the outstanding debtors. So we need to go and check our debtors control. So the value that we have there, guys, of our debtors control is actually how much? From our balances is 516,660, and then we need to adjust by how many percent? By 5. So multiply by 5 there. Okay, after multiplying by 5, our provision for bad debts for Feb 2024 is how much? 25,830. When 2024, however, on 2023 we have 29,520 2023. So as you can see that we have a lesser value now on our accounting period. So the provision for bad debts has declined, right? It means now we have income. So provision for bad debts adjustment, right? Adjustment. So you can just minus those two values there, and then on my side I'm getting a figure of 3,690. So we're going to slot that 3,690. Okay, so we need to just add all those values together and then get our other income. Okay, so the value now that I'm getting on my side, I have 1,902,000. Oh sorry, 1,902,000. So it's 1,902,000. Okay, so let us calculate now the gross operating income. So the gross operating income again, it will be the gross profit plus other income. So the gross profit is how much? 2,845,540 plus 1,902,000. Okay, so it means now the gross operating income, it will be 4,747,540. Okay, so let's check now other operating expenses. We have audit fee that is already given. What about sundry operating expenses? Given. Bad debts given. So it means now we can just start with our trading stock. Since we already determined that we have trading stock deficit, right? So we revealed that in our books we have trading stock of how much? 654,500. And then we minus retaining stock from the physical stock stock taking of 647,100. So the trading stock deficit now will amount to 7,400. And then what about the packing material there from information number 3? We're told that the packing material used during the year, right? It was how much? 58,700. So we have used there, not what is left. So we are recording what we used, right? So it means now that 58,000 of what? Packing material. We'll take that figure the way it is, which is 58,700. Okay, what we used during our accounting period. And then as well, we also have insurance, guys. Insurance. Okay, so let us just record this figure here from our balances of 100,800. Okay, so that 100,800. So on additional information number 5, guys, we're told that monthly insurance premium were fixed for the past 3 years and we paid up to 31st May 2024. Okay, so it means now that 100,800 is for how many months? So we prepaid insurance, right, for the month of March, April, May. So it means now we paid 3 more months in advance, right? Prepaid for 3 months. So it means now that 100,800 is for how many months? Is for 15 months. So we divide by 15 here, divide by 15 is 100,800 divided by 15. Okay, so which means the monthly insurance is how much? 6,720. Okay, so it means now on our side we need to go and minus this figure of 6,720 and then we multiply by 3 as well, the 3 months that we paid in advance. Okay, so on my side I'm getting a figure of 80,640. Okay, so moving along, guys, we have as well salaries and wages. So on my side I'm just going to write S and W. Please write in full when you are writing the exam or any test. So salaries and wages, so please go and check transaction number 7. So on transaction number 7, we are told that one employee was omitted from the salaries journal of Feb 2024. So it means now we need to go and take the figure from our balances first, right? Balances of 1,425,600. Okay, and then it means now, since this one employee was omitted, we are told that his net monthly salary was how much? 19,340 after 35% deductions were made for his pension fund and then as well for personal tax. And then we're also told that 2,500 were deducted for medical aid. And then the employer contributes 10% of his gross monthly salary, right? So the employer contributes 10% of his gross salary on behalf of employee towards pension fund. Okay, so let's get started with our calculation. So on our side, guys, we need to calculate what? The gross salary. But however, we are given what? The net salary. So net salary, how do we calculate net salary? So the net salary, which is NS, is equals to the gross salary minus what? From the gross salary, we are paying 35% for deduction. So it's the GS times 35%, 35%, and then as well we need to minus the 2,500. Okay, so it means now net salary, as you can see there, it is given is 19,340, which is equals to GS minus, okay, so 35%, guys, is actually 0.35, 35 GS minus the 2,500. Okay, so the 19,340, we need to minus that 2,000. We need to add actually that 2,500 from the right hand side to the left hand side. The sign will change into a positive 2,500, which is equals to, we have an invisible 1 here, so it's going to be 1 minus 0.35, right? So on my side, I'm getting 0.65 GS gross salary, right? So the 19,340 plus 2,500. So on my side, I'm getting 21,840, which is equals to 0.65 GS. Okay, so what do? We divide by 0.65, both sides, divide by 0.65. So these two, they will cancel. We're only left with the GS. So GS is equals to, we're going to divide there by 0.65. So the gross salary, guys, is 33,600. 33,600. Okay, so it means now we need to go and add that 33,600. Okay, so we need to calculate as well the employer's contribution, which is how many percent? 10%. So we're going to take this gross salary of 33,600 times 10%, and then on my side I'm getting 3,360, and then we go and add that 3,360. Okay, so we need to add all those values together, and then on my side I'm getting a figure of 1,462,560, right? So let's go to our other expenses. We also have directors fee, guys. Directors fees, right? Okay, so let's look at transaction number 8. So on transaction number 8, guys, we are told that the company had two directors who received a combined annual fee of 1,065,200 after their monthly fees were increased by 5,800 each on 1st August 2023. Right, a third director joined the company on 1st November 2023 and received the same monthly fee as the other directors as well, excluding the increase of 5,800 per month. So I need to calculate now the amount that the directors were receiving before the increment. We know that we have how many directors? Two directors, but we don't know the amount that they were receiving before the increment, so it's 2 times x, right? So that amount that they were receiving before increment, they were receiving that amount for how many months? From the 1st of March, April, May, June, July, right? For 5 months. So we multiply by 5 as well, okay? And then plus we still have those two directors, and then as well we don't know the amount that they were receiving, then we still times by x. But with this second x, guys, we know that that x increased by 5,800, so we add 5,800, and then we also multiply by how many months. So the increase was from when? The first of um the first of August, which is August, September, October, November, December, Jan, Feb. Then we times by 7, which is equals to the amount of directors fee that we have, which is 1,065,200. Okay, so 2 times x times 5, we're going to have 10x plus 2 times 7, which is 14, and then we still have x plus 5,800, which is equals to the director's fee that we have there. So 10x plus 14 times x, we'll have 14x, 14 times the 5,800. So I'm getting on my side 81,200 is equals to 1,065,200. Okay, so it means now we'll add 10 plus 14, which is equals to 24x equals to the 10,000, sorry, 1,065,200, and then what we do, we'll multiply, we'll minus the 81,200 from the left hand side to the right hand side. The sign will change into a negative, so it means now we have 24x equals to, we minus there, and then you should get a figure of 984,000. And then what we do, we divide by 24, both sides divide by 24. So 24 will cancel 24. X is equals to, the director's fee is how much? 41,000, right? It means now those two directors, they were getting how much? 41,000 a month before the increase of 5,800. So we are told that this new director joined the company from when? The 1st of November, December, Jan, Feb, right? So we only had this new director for how many months? For 4. It means now we can just write this director's fee of 1,065,200 plus director's fees 41,000, and then we multiply by F4, right? And then the director's fee, guys, on my side, I'm getting 1,229,200, right? And then we need to account for depreciation as well. Depreciation. So if you can remember, we did calculate the depreciation on equipment, and then that figure was 127,800 plus the depreciation on vehicles, which we already calculated on 1.1.3, which is 181,360. Okay, so please add those two figures. Then on my side, I'm getting 309,160. Okay, so let's add all our expenses now. If we don't have any other expense, yes, we don't have. So we add all our expenses, should get the operating expenses of 3,371,340. Okay, so and then what about now with the operating profit? So operating profit is the gross operating income minus operating expenses. So it's going to be the 4,747,540 minus operating expenses of 3,371,340. So the operating profit, guys, is going to be how much? 1,376,200. Okay, so as you can see here, guys, we're already given net profit after tax. So if we're given net profit after tax, we need to check the last information, which is number 9. We're told that the net profit after tax is 992,160, was calculated after taking into account all the adjustments above. So income tax is calculated at 28% of the net profit. So we just need to use that 900 to calculate the income tax 992,160, and then what we do, we'll multiply by 28 over 72. Okay, so the income tax, guys, will amount to 385,840. Okay, so to calculate now the net profit before tax, so it's going to be the net profit. So net profit NP, net profit after tax, plus what? The income tax, plus income tax IT, right? And then you should get a net profit before tax of 1,378,000, right? And then what about now with the profit before interest expense? So the profit before interest expense as well, guys, we are going to take the net profit before tax NPBT, net profit before tax, plus interest expense IE, right? We add these two figures, and then on my side I'm getting net profit before interest expense of 1,527,400. Okay, which means now the interest expense, it is going to be the balancing figure, right? So we just minus, there is the balancing figure. We minus these two. Okay, so on my side I'm getting interest income of 151,200. Okay, so guys, we're actually working backwards here. As long as you are given net profit after tax, it means now you are going to work backwards. Okay, so thank you guys for joining this lesson. Thank you again. Please make sure that you follow my channel, you like and share as well with your friends, so that they can get information as well, and then help me to grow my channel as well. So as you can see there, guys, I'm also offering extra classes for only 50 rands a month, and then you get to attend 8 classes a month, right? So we're attending classes once a week for 2 hours, and then you get to pass your exam. Thank you guys. I will see you on the next video.